Amazing. And thank you for that. You might hear me pause periodically to let, a few other folks in. These Tuesday ones get pretty busy. It's also during the work week, so totally understand that. But the goal today, kind of for our power hour, is just want to do a quick overview of IVol Live, some easy shortcuts and hacks, some of the things that I like to use every day. And then we'll spend the bulk of the webinar talking about the real-time spread scanner. We've done 3 of these so far over the last 3 weeks. This is the third. So what we're focusing on today are things like conversions, bare vertical spreads, and bare diagonal spreads. And I'll also show how to run screens within the real-time spread scanner to come up with trading ideas. So that is our agenda. A couple more people here. Okay, great. So if you have just joined us, let's see. And also too, we are recording this. And so what we'll do is we'll send out a copy of the recording. We're going to do some, our video team does a little bit of editing and movie magic to it. And then everybody on that registered will receive that in their inbox later today. And I'll also have the team include the prior 2 sessions, which will show the other strategies that we've already covered, over the last 3 weeks. So with that as our backdrop, let's get going. Oh, right as I say that, a few more here. Let's get going. So when you log into IVolatility, I just logged in right before hitting start here on the Zoom. So this is the dashboard. Again, our friendly little concierge will welcome you. You'll see, different shortcuts on how to access all these tools. Today, we're focusing on the real-time spread scanner, which you can access here and here as well. But kind of the meat and potatoes of the platform is, of course, IVol Live, then sentiment analyzer, P&L calculator, real-time spread scanner, backtest data download, and then our daily updates. These kind of all work in concert with one another. And then again, we'll do on these upcoming, weekly sessions, we'll do a refresher on the sentiment analyzer, P&L calc, which is one of my favorite tools, as well as backtest data download. So those are all coming. Here, you'll just get a little bit more tidbits on navigating. And then for anything, whether it's related to real-time spread scanner or really any other topic, we are always available at support@ivolatility.com. And what I'll do in a few minutes is if you're not currently an IVol Live user, I'll post the link in the chat. I want to wait until most people are already in, so that way it's visible to everybody. It gets a little funky sometimes with Zoom if you post something and then people join afterwards. So anyhow, I'll post the onboarding link in the chat for everybody. So that way, if you're not currently a user, you'll know how to get going. And again, any questions with that whole process, we're at support@ivolatility.com. So here we are, we're in the dashboard. Today, I have some specific examples I want to use as use cases. I think, the real-time spread scanner is such a muscular topic. Sometimes it's a bit easier if we already have some examples that we can use. And then towards the end, I'll show how to run scans to come up with ideas, if you didn't already have them lined up. So to come up with some of these ideas, here's what I'll do. I'll skim through, some of the latest news. I'll figure out, some of these names that I've been watching, if there's any tidbits here. This runs 24/7, 7 days a week. So, this is a really good place to come just to get an overall temperature gauge of the market. So I'll read through this. I'll also look at our news and research. This is what we put out editorially. So when we find interesting trends happening with different names, different charting patterns, different IVX figures, we covered a lot. We covered the big tech names, the FANG stocks in our last editorial piece. So I'm actually going to use Apple as one of our examples today. And so you'll see, if you had no trading ideas, right, this is a great place to come to get some inspiration because we're using the IVol Live tools to come up with all of this content, right? So that's how it all plays together. So that is another excellent source to come up with trading ideas. Now, once you have those ideas, the first thing I like to do is I come to IVol Live. So before I jump to the real-time spread scanner, it's important to know what strategy I want to evaluate, for those ideas. So in this particular case, I've got a few pulled up. You could see, with these tabs up here, this is what I've been looking at. I was looking at a whole lot more prior to this session, but I minimized those so that way we could just stay focused on these particular names. So I've been looking at Intel and Apple. Those are some of the tech names that I mentioned in the editorial piece. And then I've also been looking at Netflix and FedEx, as FedEx was under pressure after earnings. Netflix has a nice run up, but recently turned lower. So I feel like Intel will be an excellent example, as well as Netflix for us today. So we'll focus on kind of these three: Apple, Intel, Netflix. I'll explain why they're interesting and then how to design potential trades. And then towards the end, again, I'll show how to run scans. So we'll give you an idea of how to come up with these ideas like Intel, Apple, and Netflix. So I'll show you guys how to run scans using the stock monitor. We recently added this functionality where you can edit the tab, so this is the stock monitor tab. So we could just say test. This is really neat because now as we go through this, we can label what strategy we're testing each name for. So in Apple's case, I want to create conversions, for Apple. Here. And then as well, Intel is an interesting conversion example. So I can tag Intel, and then Netflix I thought would be a great bear spread. So for our various bear spreads, bear diagonal and bear vertical, I felt like Netflix will be an excellent example for that. So as we get going, let me just go ahead and mute a little bit more here. Okay, perfect. All right, so what is a conversion, and what would make Apple or Intel a good conversion candidate? So a conversion is basically where it's an options spread strategy where you eliminate underlying price movement as a risk factor, right? So essentially you're agreeing to buy and sell an underlying stock at the same price at the same date. So you eliminate price as a risk factor. So why would that matter? So in my experience, I like it when I have a company that I really like, a name that I really like, in this case, Apple, that pays a dividend that's maybe either gone nowhere, which I'll show with Intel, or it's kind of stretched to the upside. So you can see with Apple, price is in blue, implied volatility is in green. We've had this big run up in Apple. To me, it's a bit overheated. So I want to eliminate price change as a risk. And that immediately tells me conversion as a potential strategy. Conversions are also kind of on the more conservative side, but a lot of people like them because of that. It's almost like a covered call, but with a covered call, you run the risk of the underlying stock plummeting in price. So whatever you make from the call gets offset by that drop. With conversions, you eliminate that. So I'll show you what that looks like in a minute. But basically what caught my attention with Apple is it's had this big run up. I think it's overheated and topping out. And so I want to eliminate price change risk, but I also want to use Apple as part of my conservative anchor in my portfolio to generate, income. And Apple does pay a dividend. It pays a 0.5% dividend, annual dividend. And with conversions, what I'll show you is we can amplify that by almost 10x using conversions. So Apple's one really good candidate for the conversion strategy I want to show today. For a different reason, I feel like Intel is also a good candidate. So let me get this bar out of my way here. Pull up our chart that I had. So if you look at, a 1-year chart of Intel, there's a lot going on here. So if you're just new to our program, don't get confused. What this means is, price is in blue. So we could see Intel's price here. IVX, so implied volatility, is in green. And then historical volatility is in orange. So we can see now we have price kind of dipping down, and we have implied volatility dipping up, and historical volatility recently spiked as well. And you can always simplify this just by Xing out. But what I wanted to highlight here is look at Intel. For the past year, if you're an Intel shareholder, right, price is on the left. I mean, Intel's gone up, it's gone down, it's come back up, but you've basically made no money if you're just holding shares outright. So with a conversion, again, you can eliminate that price risk and then lock in a yield that's sometimes 2, 3, 4, 5x the annual dividend yield. And what's great about Intel and Apple is they pay growing, stable dividends. I don't think there's a risk of a dividend cut. It's more so the risk in the price action. So that brings me to conversions. So we'll want conversions, and then we'll get to Netflix on the bearish side of the equation. So this is another teachable moment. You can have multiple tabs open and running for iVolatility. I like to do that because I like to save my work on each tab. But in this case, what we'll do is we'll head over here to our handy real-time spread scanner, so we can demonstrate, what conversions look like and why it matters for Apple and Intel, and how, we could generate some trades. So when we come to this screen, we have to, reading from left to right, we have to decide our strategy, what stock we run the strategy against, or what group. And then we need to decide our timetable, right? And anytime, if you do have a question about the real-time spread scanner, what you can look at our guide. Just open link a new tab. So for any of these tools over here, again, if you are brand new, you might not realize we always have a PDF guide that we update periodically that covers, we always have a table of content, and it goes through and it covers kind of the meat and potatoes of whichever tool you're looking at. So that is a good little hack. But for now, let's come to our strategy. So we have to decide if we're going long or short. So with a conversion, it's a long strategy. And then we come and we have to select that strategy from our drop-down menu there. So you can see these are all the different strategies available to us within iVolatility. So we have straddle, strangle, gut strangle. We covered those in calendar spreads in our first webinar, which we'll include in the recap email today. Admit a few more people here. More in the waiting room. Excellent. Just make sure I got everybody in, guys. Sorry. Let me go. Okay, great. So coming back to this point, in our first webinar session, so 3 weeks ago at this point, we did straddles, strangles, gut strangles, and calendar spreads. So we did some really cool examples on those. We also have now done bull vertical spreads and bull diagonal spreads, as well as calls and puts and covered calls in our last session. Today, I want to focus on conversions and bear diagonals and bear verticals, and then show how to run scans. But we'll include all 3 of those recordings in our recap. So we'll keep conversion for now. Now you can always decide how you want to sort. Do you want to do it by capital required, max return, stock price, 2 standard deviation, profit, position cost? For me, I'm ambivalent. I'm used to, because you can sort these columns however you want, after you run the scan. So, I just tend to leave it as capital required, but, feel free to choose whatever you'd like. Here is an important point. If you don't specify a specific stock that you'd like to run the scan on, it'll run against the default, which is S&P 500. These are all the different scans you can run. So again, if you had no trading ideas, if you didn't know about Apple, didn't know about Intel, didn't have a theory on Netflix, you could just run these scans based on your strategies against these different groups. You can also run them against your custom groups. So as you get really adept and your feet wet with the platform, you'll start developing your own groupings of stocks. And then you can run different scans, not only here on the real-time spread scanner, but also with the sentiment analyzer against those custom groups. But for now, let's do Apple. And you can, again, get super specific here. Do you want to, look at, the stock sentiment if you were doing within the S&P? You could choose bullish, neutral, bearish, or any with any behavior, or do you want volatile or quiet? So this is more applicable if you're looking to generate trade ideas. If you already have a trade idea like Apple, you can just specify the stock. But if you don't have a trade idea, again, you could choose, your parameters here. Then options. So you can choose for expiration any, which is going to pull up the whole universe, of course, short-term, midterm, long-term, or custom. For conversions, my favorite is midterm. And the reason I like midterm is that tends to be like a 3 to 6 month expiration term. And what's powerful with that is, what I'm looking to do is double or triple the annualized dividend yield when I'm trading conversions. And so, I don't want to necessarily do a year. What I want to do is turbocharge that. So I want to make more than what the annual dividend is in less time. So that's why I have, midterm tends to be my favorite. And then moneyness at the money, just leave that as is. Risk reward, again, depending on, as you get really familiar with the platform, you could decide, hey, I don't want to look at, any trades that have, more than $2,500 required in terms of capital. Or I only want to see something with a max return greater than 50%. So those are the different things that you can specify, again, as you get more comfortable. Greeks as well. So with conversions, this doesn't really matter because we're eliminating price action, and the system's going to do all the complicated math for us when we hit search. So I'll leave that blank. But again, as you get familiar with the platform, feel free to pull that up. So here we go. Here are our results. You'll notice the expiration dates are within 2023 since I set those parameters. What you'll also notice is the strike prices are the same for the puts and the calls. So this is what I mean. We're agreeing to buy Apple, right, at 170, and we're also agreeing to sell Apple at 170. So we've eliminated the price rates. At the same time, we're buying 100 shares of Apple, underlying shares of Apple for every contract that we trade. And basically, when you do all of the math, the way this works out is what you're earning from selling the option leg where you're selling, minus what you would spend on the stock and minus what you spend on buying the other leg, that you're not selling. So minus what you're buying on the put, that equals your net profit. And when you divide your net profit into the capital that's required to put on this trade, which in this case would be $7,354, when you divide into 2 standard deviation profit, that's where you get your max return, right? So what the system is generating is it's saying, hey, here's how much capital is going to be required. Here's how much that position will cost you overall. And here's your potential maximum return. But I want to focus on this because the potential maximum return is very powerful. Apple's dividend right now is 0.5% annual dividend. So this is almost 4%. So that's like 8 times higher. And we're only going to have this position open till November 16th, so 5 or 6 months from now versus having to hold the shares for a year and run the risk of Apple turning lower. So we just 8x'd our potential return, and we don't really care where Apple goes as soon as we put on this potential trade. So for advanced traders or traders that trade on margin, that's another way that they kind of juice these returns, because when you're trading on margin, you don't have to put up the whole capital required, right? You're trading on margin. So you can filter here. You can see our lowest return is this particular trade. So I probably would not gravitate towards that. With conversions, I tend to gravitate towards max return because, again, at the end of the day, price risk is no longer a factor, right? So here's how the system will display. With conversions, again, I tend to err to whichever has the max return, and then I kind of skim through it. I can click on it. I can look and I can evaluate further. What's great about this view is it really lays everything out for me. With conversions, I showed in the prior couple of weeks, like we really took a deep dive into this spread details tab, because what we were looking at is we were looking at the underlying Greeks for each leg. And then we were coming down here and we were simulating. This is like a mini P&L calculator, where our P&L calc is extremely popular, powerful tool. It lays out the risk reward for any particular trade. But with the conversion, we don't really care where the stock goes. So it's less important. What really matters is saying, hey, with this particular return, 4.6% that I can make between now and December, is that worthwhile for my conservative part of my portfolio? And in my case, it would be, especially if I'm trading on margin, intelligently trading on margin, I should say. So when you find a trade that you're interested in, this would maybe be the one that edges out the ones beneath it, as it has the highest return. What you do if you want to have that trade follow you for further analysis, you add it to your pocket. So, you could copy to a clipboard and then, paste that into your Excel or whichever spreadsheet you're using. You could download it and then open it in Excel, or you copy to Pocket's my favorite thing. Because now what happens is in this pocket, we start building the list of trades that we're most interested in. So this was my favorite, let's say, conversion in this example for Apple. What I would do then is I'd come back to profile, and then I'd run this screen, this time on Intel, because those are my two that I want to put a position on. I'm here in midterm. So apples to apples, at the money, blah, blah, blah. Hit search. And then the system will do all the incredibly hard math, and it will return our results. I'll filter in descending order. Here we go. So in this particular case, we'd be buying 100 shares of Intel at the current price, $33.78. You'll notice that never changes because the system is running that based on the current Intel price. Then we'd be agreeing, to buy Intel at 31, and we'd be agreeing to sell Intel at 31 as well. When you do the math, 515 minus what it cost, $1.89, minus what we would lose on the share portion, right? 33.78 minus 31. So when you do all that math, you would get our $48 per contract in standard profit. And so here again, Intel pays an annual dividend right now of 1.5. That's annual. If we hold it, for 12 months, that'd be the math. So we can more than double that, and we can do that before the end of the year just by putting on this conversion trade. And that's again why this is probably my favorite conservative options spread strategy, and the real-time spread scanner does all the hard math for me, which is why I love it. So let's add that to our pocket. So now we have two interesting conversion trades. Apple pays out a bit more than Intel. All else being equal, I would probably gravitate towards Apple, because why not make the higher percentage? Although the big difference is Apple has a much higher nominal share price here. Apple's currently at 187. Intel is only at 33.78. So you could see the big difference here is in capital required. So if you're a big trader, have a large account, maybe you're drawn to things like Apple or Google or Amazon, it's going to require more capital. But in this case, higher return. If you're just starting out, maybe you want, lower nominal share price, Intel might make a lot more sense. So that's why I chose those two different examples. So now I want to highlight what I was looking at with Netflix, why I think this could be another good example for us to use today. So with Netflix, if I pull up the chart here, so first of all, just so we're all on the same page, the fundamentals of a underlying stock are always here on the left. So when I was pulling out dividend data for an example, click on the calling settings, hit div, I could just hit add. And of course, Netflix doesn't pay one, but this is where I get all my fundamental information on the stock. I also get a snapshot of IVX and historical volatility. I get the options chain beneath me. But what's great visually is I love pulling up this chart. And with Netflix, what caught my eye when I was preparing for this webinar was you have price, which has recently rolled over, right? And then we have implied volatility, which is ticked higher and crossed over historical volatility. So some cool things you could do in this view, just real quick while we're in it. A good teachable moment. You can always choose, do you want them thick, thin, skinny, chunky? Do you want a dotted line? Do you want, an arrow point? So these are the different things, but this is basically your drawing tool within IVolatility. So what's interesting here is we had this uptrend, that caught my attention, but that uptrend has recently been broken. It's broken beneath that trend. So now here Netflix could bounce and come back higher, or it could continue lower. So, but the point is, the reason why it makes a good example today is if it is turning lower, you could sell shares short, or what you could do is you can minimize your risk by taking a bearish position and using either a bull vertical spread or a bull or bear diagonal spread or a bear vertical spread, to do so. So other things we can do here, you can do a custom drawing on the chart. I like to always look at the gap between price and implied vol, which is here. So that might be something that I highlight. Another thing you could do from this view, if we come here, we could always save this. So when I'm trading, I like to save the chart setups to my trading journal. This is how you do that. Just hit save image, it'll save to your computer. And then the other thing you could do is you could, save this as a chart layout. You could load chart layouts. We do a whole webinar dedicated to charting, so I don't really want to go into that now, but basically these are all the different custom charting things I have. So when I pull up a tab, I'm just able to load that charting view and it automatically applies all the settings. Other things we could do here is we could eliminate historical volatility, and now we're looking at implied vol versus price. So another thing we could do is apply some technical indicators. So in this case, we could say, all right, well, what about the Bollinger Bands, and what about the RSI? And what's great about this is we can further, I like to use technical indicators on implied volatility. You can see these technical indicators are applied to the IVX, not the price. And what's great about that is that gives me a forward indicator. And so, let me eliminate Netflix's price here. And double click that. And what you can see now is we've got this chart down to where it's just implied volatility. So that's all we're looking at for Netflix. And what I like to do is I could see where the implied vol has gone above the upper Bollinger Band and it's gone above the RSI level. So this is kind of my tip off. This is my like glaring siren that was ringing, where it's telling me that, you know, Netflix could be heading lower, you know. And so I'll circle that point. So when I save this to my trading journal, I know these were my indicators that tip me off that, you know, maybe I should take a bearish position on Netflix. So once I come to that analysis, now the question is, well, how do you take that bearish position? What do you do? Do you just sell it short? Do you just buy a put? So there are a couple different things you could do. We can come back here to our real-time spread scanner. Let's go to our profile. So just to touch on it, one of the easiest ways to go short is to, it sounds counterintuitive, but you go long put, right? Because this would be us betting on the downside. Let's change this now to Netflix right here. So type in Netflix, and then we're looking at a time frame. You know, this is a great question, right? So this will be depending on what you feel the expiration date should be, right? Do we think Netflix will roll over in the midterm and the long term and the short term? I think based on those indicators, it's going to roll over in the short term, right? So I'm going to go here. Again, with these, you could choose, you know, for moneyness. If you're a deep out of the money trader,
lifetime members, we're starting up in the meeting room now.
Feel free to choose deep out of the money. If you're an at the money trader, which I am, feel free to do at the money. If you're in the money trader, you know, you like to play the deltas, feel free to choose in the money. But for now, I'll just put at the money. I think that's the most common. Risk reward in Greece will leave blank and hit search. And so at its most basic level, this would be a way to go short Netflix. So in this case, we'd be buying a July 7th put, you know, at 380 strike for 60 cents. So with the stock price currently at 417.20, we would need Netflix to trade, you know, below 380 by July 7th for this to be profitable. Now, you don't have to guess on the math, because you could just click on this, come to spread details, and this is where this is very, very relevant and very useful when you're looking at kind of going long and short, and where price does matter, like where underlying price does matter, which of course with selling a put, it would certainly matter. So in this case, here's what I mean. This is like a very handy mini P&L calculator, right? So it doesn't have maybe all the bells and whistles of the P&L calc, but just by clicking simulate, I know, okay, over 10, 20, or 30 days, and with Netflix going to these specific prices, what this trade would look like from a P&L calc. So I know to start making money, I need this thing to drop to 375.98. That's where it starts becoming profitable. And you could change this, you know, if you want to tighten up those underlying increments. Instead of a 10% spread, you could change it to what happens every 5%. If this was a longer term trade, you could say, you know, what happens every 20 days. And then all of that will just update as you click on it. So again, at its most basic level, that's how you would take a bearish position on Netflix. So just for the sake of conversation, copy that to our pocket. And now let's move along to another way to go short Netflix. So we could do a bear vertical spread. We come out here, we need to indicate that it's Netflix. We need it in the short term. Again, let's go ahead and turn this back to at the money, which is, you know, basically what this is saying is it's looking for trades that have strike prices that are either 10% below the current Netflix price or 10% above the current Netflix price. So that's what that translates to. Risk reward, Greeks, okay. Let's hit search. So just to recap, if you've never traded a bear vertical spread before, let me pull it up. Here's what it means. So we're going to use the same expiration. You'll see on all of these trades, on all of these results, it's always the same expiration date for both legs of the trade, right? But what we're doing is we're saying, look, we'll buy at 390, sell at 385, and essentially what our profit is going to be on that trade is it's going to be the spread between the two strikes, right? So $5 minus whatever it costs us to get in the trade. And then for us to be profitable, we need Netflix to close within these two numbers, within this expiration date, June 3rd. But our profit is capped by the difference between the two strike prices minus what it costs, to get in, right? So in our case, our risk is the $13, which is the net cost here, 28 minus 15, right? And then our maximum profit is that 500 minus the $13 cost, and then we would need, okay, click here. Again, this gives us all the different Greeks, all the different specs for each leg of the trade. So we have our delta, vega, gamma, theta, alpha, and then when the calculation is being done, which is today in real time. And then we have the same for the short put, right, where we're selling and generating the premium. So here we're selling and generating 15 cents, so $15 a contract. Here we're buying for $28 a contract. So our net out of pocket is $13. That's where that number came from. So this is, let's see, June 30th put. So this expires relatively, this expires really soon. So we could do increments of, maybe every 2 days. You could do increments of every 1 day, right? Because we're already at June 27th. And we would need this position to move in our direction, fairly quickly, right? Very quickly, because it's expiring, in 3 days. And again, we could play with the different, underlying steps. So the different things we can have here on this mini P&L, you can have time. So right now, time is on my x-axis, 1 day, 2 day, 3 day. You can have underlying, which we already have here on the y-axis. So that wouldn't make any sense. You don't want to have the same axes, right? So you always have, 2 different ones, of course. And then you could also have volatility, right? So what happens when volatility changes by 10 absolute percentage points and the underlying stock changes by 20%, underlying prices, and that will lay out, the math. So this way, exactly what, kind of P&L you're looking at based on the underlying movement for Netflix. And then it's making these adjustments to the legs volatility, right? Because it's taking what the current leg implied volatility is, and it's making the adjustments and saying, look, if Netflix gets more or less, volatile, here's what each leg of that trade will look like. So very, very handy tool. I will say that's a very short expiration. Something in June, 30th is probably a little too close. July 7th would be more interesting to me. So the different things I could do here, you could search for max return, ascending, descending order. And then what I could do is I could skim through and I could figure out, okay, what gives me a little bit more time here. And, we have the results. We have the top, I believe, 200 results here, just top 200 ideas for this particular trade. So I think July 14th, that gives it maybe 3 weeks to turn over. In this case, I'd be spending $2.11. I'd be, capturing back $1.52 from that. So my total, out of pocket could be $59, here. And then I would want Netflix to finish somewhere between 380 and 385. And I'd want that to happen by July 14th. So let's go ahead and copy that one to Pocket, so we have it. And then I want to show one more using Netflix. So that these are bull bear vertical spreads. So this is where, again, it's handy if you think a stock is going to finish within a certain range. Now, if you're not so confident that it's going to finish within a certain range, a powerful strategy is the bear diagonal spread. And here's how that works. So if we go here, all of that is the same. Hit search. So the difference with a bear diagonal, let me see what I did wrong here. Long bear diagonal. Let's also limit this down. 10 stock will come here. Any FLX. Options. Let's see what it shows us for any expiration. See what it skews towards. And then let's do at the money here. And then we can leave this blank so we can see the results. See all it has to offer us. Risk, reward, and Greeks, we'll leave those blank as well. And then hit search. And then we'll see what our system likes for Netflix. But the biggest difference with a bare diagonal spread, oh, here we go, let's see. I'll make sure, any strategy, using puts. All right, search. Is that, you have two different things with a bare diagonal spread. So essentially you have a short position that you're selling to generate income. And then you have a long position that you're taking that's going to be, costing you money out of pocket. And what you have is the reason why it's called diagonal is you're going diagonal in terms of your calendar. Let me look at a different one. The Apple. Let's do this. Example. Their diagonal, risk, reward, any. Run the numbers. And just it's visually easier to explain when you can see the expiration dates here. Interesting. I'll look into let me try to go short. Reward, using credits, Apple. It was working right before we went live here when I was playing with Netflix. But worst case, I'll do a custom video for bare diagonal spreads, and I'll include that. Okay, I'll do a custom video for bare diagonal spreads, and then include that when we send out a recording of this webinar session. So now I want to show if let's say you come, to Ivo Live and you don't really have many trade ideas, right? You want to use the real-time spread scanner to generate interesting trade ideas. So the way to do that is you would first come here to your strategy, and then you decide if you want to go long or short. Again, let's get away from the bare diagonal spreads, and let's just start super basic real quick for a, let's just say a call, buying a call option. That's all you're doing. Just want to buy a call option. And the universe you're interested in looking at is the S&P 500, right? The biggest, most liquid, popular index, I think, for most of our users. All right. And you are going to leave all of these, blank for now. So before we drill deeper, expiration date, you're looking for call options that could have a chance to pop in the short term, right? So between now and September 5th. And then for our moneyness, let's do, let's say at the money, right? Because you want to have some movement that'll be close to the current pricing, risk reward, Greeks, we leave blank. We hit search. So what this is going to do is it's going to run against the S&P. Now, typically the most popular thing that shows up with our system when you run against the S&P is SPX. So one of the indices that I wanted to show actually was the Dow. The Dow, when I run scans against the Dow, I always get some really interesting results because it's smaller. It's not as big as the S&P 500. And so it filters out. See, it filters out, IBM. This gives me 1, 2, 3, 4, 5. So we have Visa, McDonald's, 3M, and IBM. 5 different names that I could then further evaluate. And I could come here, I could look at the risk versus reward, which I think is important because when you're buying a call option, you're spending that whole premium up front. You could also do max potential return, 2 standard deviation risk. So this is going to be whatever it costs you to get into the play, right? So $14 because it's 14 cents times 100 position cost, and then the 2 standard deviation profit. So what this means is if since we're buying this call, if Visa, which is the stock here, if it moves 2 standard deviations in our favor, so if it moves higher by 2 standard deviations, this is the max potential profit for this particular call option, right? So I'd come through here, maybe find a couple that I'm interested in, and then I would just copy to my pocket. And now when we come to our pocket, we could see like over the course of 30 minutes here, we've been adding steadily to interesting trades. So that's one way to run a scan just on a very, very, basic level, right? Buying a call. You could also do the opposite. So we looked at a naked put earlier. If you wanted to sell the put, you would go short, but if you wanted to go bearish, have a bearish position, you would just go long. Stocks, we could choose, again, any here, maybe let's do top 200 by options volume. Let's have some fun here. And then we come here. I always like to make sure that this is, sometimes the presets change once the results are displayed, and then hit search. And again, we're looking within, here we go. So QQQ and SPX typically show up. Those are the NASDAQ and the S&P 500. These are the indices tied to them. And so you can see from a put position, right, going bearish, we could go bearish on the technology index, predict that it's going to roll over. And that's what these results are showing us. In this case, it's a put, not a call. So again, find a couple interesting names and then go ahead and copy to Pocket. So we have, 2 puts that we're interested in looking at a little further, since, I'm short-term bearish on the tech sector, for example. So then if you wanted to sell a put, again, we would be going short, naked put. We would hit search for the same scenario. This is, one example that, here we go, Apple. So Apple was what I was researching before this webinar. And you could see the system has found some very interesting trades where we'd be selling puts on Apple. So in this case, we'd be earning this income. And these are all very, very short term, which is why the premiums are as low as they are. But we could come here and we could, of course, say, hey, look, what if I want to generate income and I'm willing to look at expirations between now and December 27th, hit search. And what we would see is the premium. See, we're going to get paid a whole lot more money because there's a lot more time value in those puts. And what this is finding was Apple was a good short-term opportunity. But what the system's telling us now is if we look longer term, so if we look out to expirations between now and looks like January 2024, here's some other interesting opportunities. We have Altria, Walmart, Cisco, EA Sports. So let's maybe do a couple here. I could filter, max return. Oop, there it is. Altria and Cisco was actually on my hit list as well. So I could add those to Pocket. So then we come down here and just real quick, maybe covered call, so let's say we want to go long a covered call and we want to look at names again within the Dow, just as an example. I'm going to come here, options, do add the money. There we go. Risk reward, Greeks, hit search. And so a lot of our users really like doing covered call trades. And what's beautiful about this is one of my favorite scans because covered calls can be tricky. Like on the one hand, they're very easy and simple, but the math can get wonky. And so what I like is I love to run the scan against an index, which we just did, the Dow, or I love to run this covered call scan against my custom groups. And you can actually see this was a custom group I created called dividend paying S&P 500. So these are only stocks within the S&P that pay a dividend. I love selling covered calls and doing conversions against dividend paying stocks because it juices the returns. Hit search. And then this would be an example of me running the scan against my custom group. And the favorite result is Johnson & Johnson. And then we could filter through, max return. Let me look. Okay. So it'd be buying a call and selling J&J. Actually, we need to go the opposite. Short covered call against the Dow. Options, the money, search. So that's a good example of, going with the strategy and making sure you have long or short specified. So that's how we'd run the covered call scan. Again, you can run all these scans for all these different strategies. What I would do is like maybe review the 2 videos we did before this plus this video and decide which strategy you're most drawn to, and then actually run these scans against that strategy using IVolatility. So you could see with today's session 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 interesting trade scenarios popped up. Here we can save the Pocket, right? So that way we don't lose it. And once we save the Pocket, anytime we're in a new session, right? Let's say you go grab a coffee, grab lunch, you leave, and you come back, you're able to come to a pocket, right? Because it'll be empty. And then you can just open the pocket and it will populate here. Another cool feature about this is the monitor. This is another cool watch list. I think we get the question periodically, well, how do you create a watch list of potential options for a stock, right? So in this case, we can do Netflix, since it's been something we've been interested in. Oh, let me type that in right. NFLX. And you could say, all right, we're interested in calls and puts for Netflix. We have a short-term bearish bias against Netflix. So we'll look at things from today till the end of July. And then strike price, we could say, I'll just show you how vast it could be to begin with, and then we'll whittle it down. So here we go, hit enter. And we could see this will give us the data on Netflix. So here's our quote time. Here's the underlying, it's at 418. Here is our option symbol. Here's the IVX, for Netflix, 45.45. Here's the type. And so here's another example of how you could design a trading strategy. So if we wanted to sell a call and say, look, we don't think Netflix is going to go any higher, we want to sell a call, that's another way of being bearish. We could eliminate any of the put results. And then we could just, we could really tighten this up and say, look, we think Netflix could drop to 400, for an example. So we want to look at strike prices from 400 to 420, and look how much that tightened up the results here. And this is going to give you kind of similar to our options chain view within IVolatility. This will give you the expiration, the strike price, the bid and the ask, the implied volatility for the specific strike, and then the delta. So for every dollar that Netflix moves, this particular option is going to move 88 cents. So that's also very helpful information. And so, now that we have kind of this range of strikes and this range of expirations, let's tighten that up a little bit more to say July 21st. So we've tightened it up even more to those expirations. And we could even say, look, we think it will happen by the 14th. And we are only interested in those particular names and the particular strikes. So $20 spread basically. And we're only interested in selling the calls. Then we could say, well, what if we're interested in just buying a put? All right, we want to go bearish by buying the put. You could just check the put box. And now this is only showing us the put results. So we know exactly how much it would cost us, what the implied volatility is, what the delta is, etc. So depending on how I want it to be bearish, those are the different ways I could filter these results. And then I can save. And now this monitor saves. And then the same thing, if I walked away, went to lunch, grabbed a coffee, etc., then I could just come back, start a new session, real-time spread scanner, and I would be able to add a monitor. I would be able to go to open monitor, and then that would populate here. So that's how you create a watch list within the real-time spread scanner between the monitor and the pocket. And then as well, one other way to run scans, because this question came in before we went live, you can run the scans within the real-time spread scanner. But if you wanted to run scans within IVolatility to then put into the spread scanner, so for example, yesterday and today, I was running all those scans on tech names, which is what populated these trading ideas, Apple and Intel, and then Netflix. So best way to do that, while you're getting familiar with the platform is we have these preset scans, top stocks by volume, right? Which is running the scan on where the action is within a certain grouping, right? This is S&P, you can show 20, 50, however many results you want to view. Then you have the implied volatility mean versus 20-day historical volatility, right? So this is showing past HV20 versus future IVX30. So you could say, wow, this looks interesting. Activision Blizzard is actually what we used in our first webinar on the real-time spread scanner, where I showed how to design bull vertical and bull calendar spreads on Activision. You see we have Chipotle. So I always get one or two interesting ideas by looking at this tab, IVX mean versus 20-day historical volatility. I like to see a reading of 2 or higher, which shows that the future could be twice as volatile as the past. IVX historical range, this is like a 52-week range for a stock. So it's, in this case, a low of 1633, a high of 4869. This is important because it puts everything in perspective, because, if you get an IVX reading, it's like, well, what does it mean? Is it high? Is it low? I don't know. And the way you do that is you put it in context by looking at its, its range. And in this case, we could see for Activision, it is high relative to its historical range. And so that's again why I used that as example last week. And then IVX changed from yesterday. If you're a very short-term trader, you're looking for short-term hits, you can see I was running a scan against the TX60. So, a little north of the border from me, but you can, have this to be the Dow. And this will show you, okay, 3M has the highest day over day change in its implied volatility. So something interesting could be going on here, right? And then you could take, 3M, go to the real-time spread scanner, and then you could start running scans. You would come here, say, hey, look, there was something going on there with 3M. I'd love to learn more about it, and then you could just choose the strategy, so, in this case, let's just leave it, straddle, options, or scored, search. And then all of a sudden, by running a scan in IVol Live, you now have a stock, 3M, that you're interested in evaluating further, right? And that's how these tools, talk and work together. And then once you have, your favorite trade, you can run that through the P&L calculator. And then through the P&L calculator, it'll tell you exactly what your risk versus reward is. So what we'll do probably in our next week's session is we'll focus on P&L calc, because I think that could be a perfect tie-in to real-time spread scanner. So with that being said, I want to pause for any questions. Before we do questions, let me get this on. We have our link here that I want to post in the chat. This link is, where's your filter? This link is, so if you haven't currently joined us, if you're brand new to IVol Live, or if you haven't even registered for the program, all you got to do is click on this link and it will take you to that page I just showed. And from that page, you can register, for IVol Live. And along the way, if you have any questions for us, we're also at support@ivolatility.com, which I'll put in here. So that's our link, onboarding, registration link. And then support@ivolatility.com. All right, so I want to pause. We're at 12:53. So I think, we like to have at least 5-10 minutes for any questions. You could just put them into the chat and then I can answer those. I'm joined by our founder and CEO, Mr. Genna, who does a great job helping me kind of in the chat room there while I'm talking. Come here. So any questions related to the real-time spread scanner? Yes, this will be recorded, and it has been recorded, and we'll edit it and we'll send it out. I'll also do an addition at the end of the video that shows the bear diagonal spread as well. So you have that, plus the ones that we recorded last Tuesday and the Tuesday before that. Come back here. I had a question on conversions. So let me go back. We had, we were long version. Good time spreader, we were long. Conversion. We had Apple. We were looking at midterm. So the default here was the implied volatility difference greater to or equal to, greater than or equal to 1.1, right? So for the IVX consideration, then when you come here and search, this will populate with your different results. And then if you want to drill down deeper on each leg, so we come here, the particular implied volatility per leg is listed right here. So here's our put that we're buying with an IV 25.02. Here's our December call that we're selling. You can see this is a difference greater than 0.10. So we're generating the premium here. We're paying for the premium here, and then we're buying the stock here, right? And then the way the profit works is 25.50 minus 4.45 minus the cost of buying Apple versus the 170 minus 2772, and that'll equal out to the net premium amount, and that net premium amount divides into the position cost. And then from there, that's why you don't really care where Apple goes, because you have the ability to buy it or sell it at the same point in time for the same strike price. But this is where you would find not only the implied volatility, but the different Greeks for each leg of the conversion. And then this gives you the total for the position. And then here's the pricing: bid, ask, size, volume. Excellent. So the way the volatility would factor in is basically on the side that we're selling, we want the implied vol to be higher, because when the implied vol is higher on the leg that we're selling, we know our net premium will be high enough. Because the problem is if you try to run this math by hand, it's extremely challenging. So what the system does is find instances where the same strike and the same expiration, right, for the same company, for the same name, Apple, where that's out of whack, right, where it's not equidistant. And then the arbitrage opportunity is essentially when the implied volatility on the portion we're selling is higher than the implied volatility on the portion that we're buying. And so that's what the real-time spread scanner does very well. That doing in Excel is extremely challenging, because first of all, you have to get the data, and then you have to run the math on that data, and you have to do it every day. Whereas here, with a couple of mouse clicks, it automatically calculates where this relationship between put and call for the same expiration, where it's out of whack, for whatever reason. And then it gives the math on how to capitalize on that. Very interesting strategy. Like I said, it's a conservative strategy. It's not one where you're going to make triples, but it's, to me, a consistent single, right? Getting on base, getting on base, getting on base, getting on base. And for those that are, maybe trading on margin or bigger accounts, it could really be a nice, consistent portion of the conservative portion of the portfolio. Well, all right. Well, we are at the hour. Thank you, everybody, for joining on a Tuesday here. Like I said, we'll do some movie magic to the video. We'll make a couple of those enhancements I mentioned, and then we will shoot this out to everybody via email. We'll also put that registration link in there just in case anybody needs that for reference. So in the meantime, this has been Jonathan with IVolatility. Thank you for joining me today, and look out for an email for our next week's section. Happy trading.